Well, it's been a while since we've gotten to talk to our next guest, but we are delighted to have billionaire and value investor Mario Gabelli back on set with us to talk about, well, everything from Trump to earnings season so far, the media landscape, including Paramount Global, deal making, a little bit of gambling, and of course, the markets. Mario, of course, is the chairman and CEO of GAMCO Investors. And it's great to see you here this morning, Mario.
That's terrific.
Let's talk how things have changed. I think the last time I talked to you was in May. Mike was there, too. We're talking about some of these issues. Yeah. But what has changed since the new administration came in? How are you thinking about things?
Well,
I know
first of all, you had
bottom up, but
you had a good market. You had a good market top. How do we grow the economy globally? The IMF says it's 116 trillion. The United States is the leader. So we need to help productivity and population growth. But productivity will they become the summa cum laude. And what happens in productivity is an important ingredient for the growth in real GDP. Then the problem I have is always the same. It's debt and deficit. Okay, we spent $7 trillion. We took in $5 trillion. The government has to grow revenues, and they do it by growing GDP, obviously getting a more practical tax dynamic, for example, certain things. And then you look at the stock market, which is a function of earnings for companies, the revenue growth, gross margins, SG&A, taxes, and the most important thing, which is the multiple. The multiple is a function of interest rates, which is a function of debt and deficit. It's a function of confidence, and confidence is terrific. The thing that has happened that from the businesses I talk to, the confidence factor is materially different in terms of how do they work. Financial engineering. Larry Culp, for example, at GE, look what he did by spinning off companies. Look what Max did at Mitchell, did at Crane. The stock was 70. It's a 210 equivalent today. So we're going to see a lot more of that. Dry powder among the private equity firms. They're going to have to monetize some of their holdings. The question about some of their LPs is liquidity, so this is a minor change. And then strategics, corporate lovemaking. Don't look at me that way.
It's back on.
I said corporate lovemaking. What?
Yeah, M&A activity back on. There'd been a freeze on that for quite a while.
Well, yeah, because you didn't know the rules. And, you know, if somebody worries about shoes, you're going to say, you know, what's all that about? The destruction of value, like iRobot, by not having a deal approved, I hope that's behind us, and I think it is. So the notion of company A, and then you're going to get these activists that want some visibility coming after companies. Okay, for example, in a paper today, Ed Garden, who spun off from Treon, was knocking on a door at Middlebury, a company that is okay, but, you know, some financial engineering is going to be helpful. So we're going to see a lot more of that.
What are you doing differently? What have you changed in terms of your positions? I didn't see Paramount Global listed anywhere in your top.
No, well, you looked at my top 100. Yeah. Bottom line, the notion of like Netflix. What's the benefit of Netflix? I made a movie, okay? Wins an Academy Award. I get the box office, domestic. I then have to make another movie. By having streaming, you get recurring revenues, and that has a greater economic value to the stakeholders in terms of what they're doing. So you want to get into that mode. And then, you know, you've got new people at the FCC. Okay, Brendan Carr is going to do things. What is he going to do with regards to traditional television? Is he going to raise the cap? That right now it's 39.5% plus or minus.
And the cap for?
The amount of TV station coverage you can have of the U.S. population in the United States. So you're going to see some activity there. Does that mean that CBS can take their stations but keep the network and spin them off and do something creative? Does that mean that Nexstar will be able to buy someone? Does it mean that Tegna, which has TV stations that were turned out by some challenging dynamic that I've never witnessed in 60 years of following the industry? So those are the things that we look for.
What do you think of SpinCo at Comcast with spinning off CNBC?
Okay, well, if you're going to, in the entertainment world, obviously, I like certain other things. Right now, what is the most important thing that streaming wants? What is the most important things that anyone wants?
Business news.
Sports. Yeah. Sports and live news. Mm-hmm. So what you're doing is live news, and that's very important. So take a look at financial engineering. There was a rule that was passed, NFL, you can buy 10% of it. All the other sports teams, the NBA, the NFL, and so on, you can buy 30%. And they lay out a dynamic of who can do it. They'll create a GP And there's a certain number of GPs that are allowed. That's why, as much as I'm a Yankee fan because of my Bronx background and because of my passion for the team, I'm a big owner of the Atlanta Braves for clients. I have probably 900 clients that own a piece of it. Everyone should own a piece of a baseball team without paying any fees and total liquidity and can get passionate about the Braves. So the stock is 40. There's 62 million shares. John Malone owns 1 million plus or minus, and he owns 48% of the vote. Terry McGurk's done a great job. Then in addition to that, right here in New York, you've got the Knicks and the Rangers, and the stock is selling at 220. There's 24 million shares. You multiply that out, you're getting the Knicks at a discount and the Rangers for free.
MSG, by the way.
What?
MSG, you're talking about that.
Yeah. Oh, I'm sorry. MSG is the symbol.
Yes.
MSGS.
Madison Square Garden.
Yeah. Okay, so thank you, Robert. Yes. Good catch. And so that's what we're looking at. But you take what I would like to see in taxes, corporate level, no reason to drop to 21%. But you should have a minimum tax on a cash basis. Book taxes are all in the 20% plus state, but you got to have a minimum tax. The second part is give back 100% bonus depreciation. So if I'm a farmer and I'm cutting down, working my fanny off, fence-to-fence planting, I would like to get new equipment that is technologically efficient. So John Deere is having a bad earnings. Earnings went $35 a share 2-3 fiscal years ago. They're down to 19 or 20 this year. How bad is bad? How long is it going to be bad? But if you give the farmer 100% write-off, right now it's dropped to 40% in 2025 bonus depreciation, 20% next year, they're going to buy equipment because it's going to help them. They're going to go along the farm and find the weed before it grows. And
well, Hans Vestberg was here this morning saying he would like to see something similar for all of the capex that they spend putting back into the cable business. So
if I'm a corporation, I normally would get a tax deduction for capex, but it's a longer period of time. Here I'm just getting it a little earlier. Meanwhile, revenues from the corporate world are over $500 billion anyway. Out of the $5 trillion that we're billing in, that number's at an all-time high. So those are the things. Then from the individual, obviously, I'd like to get rid of carried interest. Okay, I'd like to change the SALT tax, state and local taxes. I'd like
increase it, you mean?
Well, it's the individual living in the state of New Jersey, New York, Connecticut, and some other states like on the West Coast, basically they pay higher taxes than they did pre-Trump.
Right.
Because you can't deduct it.
Which is why you see the negotiations that are taking place right now.